Okay, so hello future auditors. Hope you all are doing really well. I am CA Supreet Agrawal, your faculty for ACCA AAA subject. My friends, I am an XCY India, ex-KPMG Bahrain and an India Book of Records holder. Whenever I have worked, be it at EY or KPMG, I have worked at the assurance and audit domain only, and I am going to use that knowledge along with my teaching experience of multiple years. I'm going to make this subject a very fun and learning experience for you. Okay, but before we move further, I would like to ask you one thing. If I ask you right now that whether audit is a practical subject or a theoretical subject, what will you say? If I ask you right now, if audit is a theoretical subject or a practical subject, what will you say? What will you say? A theoretical subject or a practical subject? What will you say? I'm sure that most of you would answer that audit is a very theoretical subject. In fact, it is fully theoretical subject. However, I would like to tell you that audit is a very practical subject, and I have a line for the audit that I would like all of you to remember during all of our sessions. Okay, that line is: audit is the most practical subject. Audit is the most practical subject written in the most theoretical manner. Written in the most theoretical manner. When I say this line, what do I mean by it? What do I mean by it? Let me tell you. Okay, when I say audit is the most practical subject written in the most theoretical manner, why do I say that? I say that because whatever we study in audit, maybe it could be ISAs, it could be some extra topics like money laundering, all of those topics are applied at the ground level as it is. Whatever we study, the same thing would be applied at the ground level also. In a lot of cases, you'll never see there is any assumption. There can only be professional judgment that could be applied, but there would not be any assumptions, there would not be anything adjustments, and you will be able to apply whatever you are studying as it is at the ground level also. And that is why I say that audit is the most practical subject written in the most theoretical manner. Understood? And we have to repeat this line again and again to remove this belief from our mind that audit is the theoretical subject. No, it is not. It is a very practical subject. And how do we need to learn that? We need to learn that through real life examples. We need to learn that through what? Through the case studies. And that will make the subject more learning and fun experience for all of you. Okay? Now, the question arises that what all things we are going to cover in today's session. What all things we are going to cover in today's session. So let me tell you. Before we move further, you should have a clear idea about what we are going to cover in this session as well as all of our other sessions. Okay. So first thing that we are going to cover, the agenda for today's session is, first of all, we are going to cover the basics of audit. Okay. I know that a lot of you could be there who would already be aware about the basics of audit. But before we start any subject related to audit, first thing that we should do is we should be very clear with the terminologies. So even if you are sure about it, even if you know about it, what you should do is you should quickly run through the session. And if you are not aware about it, you should see the session very nicely, very properly, so that you get aware about it right now. Because a lot of you might have gotten the exemption at the AA level, and that might make your AAA journey a little harder. Okay, so to avoid that, what I am going to do is I am going to cover the basics of audit. Although it is going to be covered for next 30 to 45 minutes only, so that it doesn't get monotonous for you. Okay, after that we are going to go for chapter number 1, which is the international regulatory frameworks, and there you will get to learn about a lot of organizations, a lot of bodies, a lot of committees that makes the standard setting bodies across the world. And then we are going to go for chapter number 2. We are going to go for chapter number 2, okay, which is money laundering. Okay, what about the questions? So we are going to solve the questions in tomorrow's class. We have a class tomorrow also at the same timings. Okay, so you will be able to solve the questions in tomorrow's class. However, if you are not aware about what is the overall structure of AAA and everything about that, what you should do is you should see our orientation session. What you should do is you should see our orientation session. Where you can find it on my YouTube channel, which is ACCA with CA Supreet Agrawal. ACCA with CA Supreet Agrawal. There you can find my orientation session. Okay, it would be an orientation session for what? For AAA as a subject, and we'll get to learn about what all are the detailed criteria under which we will be learning, what all things you will be getting, and how we will be preparing for AAA as a subject. Okay, I hope this is clear. I hope this is clear. Yes, I hope this is clear. Amazing, amazing, amazing. I hope this is clear. Now let's get to our first topic for today, which is the advanced audit and assurance, but the basics of audit and assurance first. Okay, so if I say what is audit, I'll quickly run all of you through it. However, if you have any questions, be it very basic question also, be it very advanced question also, please feel free to put it on the chat box. I would be happy to answer it. Okay, so no worries about it. Okay, now audit. What is audit? Okay, so audit is an independent examination. And independent, when I say independent, what do I mean by it? That it would be conducted by independent parties who are not the employees, officers, or consultants of the company. An independent examination of financial statements. What are financial statements? What is the meaning of financial statements? Anybody who can tell me what financial statements include? Anybody who can tell me what financial statements include? Anybody who can tell me what financial statements include? So it includes balance sheet, income statement, cash flow statement, statement of changes in equity, and notes to FS. Okay, these 5 together makes the financial statements. Okay, then to provide an opinion as in Hindi we say Rai, on whether they present a true and fair view. What is true and fair view? We will get to know at the end. What is true and fair view? We will get to know at the end. Okay, we will cover it. True and fair view. Okay. However, if I have to write in one word, true means correct or honest. Fair might mean appropriate for the scenario, appropriate, or substance over legal form, substance over legal form. That is, you are presenting the actual transaction rather than just the legal format. For example, if somebody has done that transaction to avoid the real ownership, so what you will report? The real ownership. Okay, now what is assurance then? What is assurance? What is assurance? We generally use these terms interchangeably, audit and assurance. However, what is assurance here? So assurance, a professional service that improves the reliability and credibility of information for decision making. Now tell me one thing, which has a broader scope? Which has a broader scope? Which has a broader scope? Audit or assurance? Which has a broader scope? Which has a broader scope? Audit or assurance? So I would say assurance, because in audit only independent examination is covered, whereas in case of assurance multiple other services are also covered that enhances the credibility and reliability of the financial information. Okay, I hope this is clear. Now there are certain basic terminologies that we should be very well aware about. Number one is ISA. What is ISA? ISA stands for International Standards on Auditing. In ACCA syllabus, we will be calling it as International Standards on Auditing. International Standards on Auditing. Okay. When I say FS, whenever I would be using the word FS, it would mean the financial statements. It would mean the financial statements. When I say audit procedures, so we will be learning about what are the exact audit procedures that an auditor could apply, and we will be learning about it. Will we cover it? Yes, here we will cover it. Okay. Then assertions. So generally assertions are the criterias. Assertions are the criterias against which a subject matter, that is the financial statements, are evaluated. So we will be discussing about that. And then there would come a discussion of risk. And I would say that this would be a very important discussion, because before getting into audit, you should know that whenever we conduct the audit, we conduct the risk based audit. That is, first of all, we have to identify the risk, then we have to see the potential for the risk, that is, we need to do the risk assessment. And once we finalize that what are the potential risks, what are the significant risks for us that we need to resolve, then we apply the controls, then we apply our audit procedures to reduce that risk to an acceptable level. Okay, so I hope this page is clear. Now before moving further, few questions, okay, that I generally get from students. Okay, so will we get these notes? Will we get these handwritten notes. Okay, although all of this is covered in detail in that orientation session that you should really see, will we get handwritten notes? So yes, my dear friends, you will get the notes plus the board notes also. So whatever I am writing over here, you will get that also. For ease of understanding, you will get that also. Okay. Now, when would the classes start? When would the classes start? When would the classes start? So my dear friends, the class has already started. When? Today. This is the first lecture, already started. Okay, so this is a first lecture and we have already started with the classes. So how do we enroll? How to enroll? So you can go to our website www.bbvirtualsglobal.com. okay, bbvirtualsglobal.com. okay, how do we connect with you? How to connect? So my dear friends, on YouTube and Instagram I am available with the same username, which is ACCA with CA Supreet Agrawal. Okay, and on Telegram I am available with the same channel name, ACCA with CA Supreet Agrawal. Okay, so I hope this is all clear, very clear to all of you. And if you have any questions, please feel free to reach out to me. Okay, on LinkedIn you can find me with the same name, which is CA Supreet Agrawal. Okay, so I would be happy to assist you in all of your questions. Don't worry about it. Now standards on auditing, the international standards on auditing. Let's talk about it. So in international standards of auditing, there are multiple series. Number one is ISA 200 series, ISA 300 series, ISA 400 series, ISA 500 series, ISA 600 series, ISA 700 series, and then ISQM are also there. 2 ISQM are generally over there. Now, when I say ISA 200 series, it majorly talks about the overall objectives and communication. When I say overall objectives, so overall objectives of an independent auditor. Then communication with management, communication with those type of governance, communication of deficiencies in internal control. All of these auditor needs to communicate. So how they need to communicate, when they need to communicate, all of this would be given by ISA 200 series. When I say 200 series, there could be multiple standards regarding which could include ISA 200, ISA 210, ISA 220, ISA 240, ISA 250, ISA 260, ISA 265. Okay. However, we will have a detailed discussion on our YouTube channel in a matter of say few days, when we will be discussing about that what all things are examinable in AA and what all things are examinable in AAA, because you do not need the knowledge of everything in AAA. There is a clear criteria. I'm really sorry. Yeah, there's a clear criteria that what would be tested in AA and what would be tested in AAA. Okay, so you do not need to worry about it. Just subscribe to the channel and we will have a good discussion about it. Now, ISA 300 series looks after planning and risk assessment, that is understanding the entity. We discussed about identifying the risk, assessing the risk. So all of that would be taken care of by the ISA 300 series. Then ISA 400 series. ISA 400 series is risk evaluation. ISA 400 series is risk evaluation. That is what are the potential risks and that we need to 100% significantly address. Then ISA 500 series talks about audit evidences. What kind of audit evidences you need to take? Should it be external confirmation? Should it be analytical procedure? How do we need to take out the samples? All of this would be taken care of in ISA 500 series. Then ISA 600 series, using the work of others. Now this others could include management experts, auditors expert, and the internal auditor. Okay, then ISA 700 series talks about reporting, that what all are the criteria of reporting, what all things you need to consider while creating an audit report. Say key audit matters, say other meta paragraphs, say emphasis of meta paragraphs, say other information. Is it all covered in AAA syllabus? Yes, it is all covered in AAA syllabus and it is going to be very interesting. Okay, and that is why I am taking this session, which is a fundamental session of our discussion, because it will help us to have the future discussions at one go only. Otherwise, what might happen is once we go to the syllabus part and we discuss about certain things, a lot of times I have seen that students face this issue that They are not aware about this exact term, they are not aware about the exact procedures. Maybe they have studied earlier, but they are not aware as of now. So that is why I am quickly revising all the important pointers, so that if I say that we will be studying it in ISL 700 series, you should already know that what is ISL 700 series. Now ISQM, so there are certain standards which are prepared for the purpose of quality management both at the engagement level and at the firm level. Okay, now audit procedures. What are audit procedures? Generally if I tell say Mr. A and Mr. B to conduct an audit of PP&E, property, plant and equipment, do you think they will apply the same procedures? Maybe not. They might not be applying the exact same procedures. They might be doing as per their professional judgment, and the conclusion that they derive might be very, very different, right? That could happen. So what we need to do here is we need to ensure that whatever we are doing, we have to do it through a system. Okay, we have to do it through a system. When I say system, what do I mean by it? The procedures, system, process, procedures. Okay, and in audit there are multiple procedures that have been given, like ICAI ORR. That is the procedure that is given. Now this first I stands for inquiry. When I say inquiry, what do I mean by it? Inquiry as in the first procedure of the auditor could be to inquire the management or any person within or outside the organization, whomsoever they consider fit. Then there would be confirmation procedures. When I say confirmation procedures, what do I mean by it? See, whatever you know the answer for, please feel free to write on the chat box. I would be happy to read it, and if you have any queries, please feel free to ask. Okay, not an issue. Now, confirmation procedure. So generally it is used for those items which has a balance with an outsider party. Say bank balance, say debtors balance, say creditors balance. Okay. Then analytical procedure. So what we do here in confirmation procedure, we take the direct written confirmation from the independent party. Then analytical procedure. Analytical procedures are generally setting an expectation and comparing with actual. So it happens in the case of rationalization. For example, rent expenses. What we do, we see whether the agreement is valid, we see how many months the premises was rented for, and then we see that the monthly fixed rent is say 50,000 rupees, and we extrapolate it. We say that for 1 month it is 50,000 rupees, and generally there are no variable charges. So for 12 months it should be roughly 6 lakh rupees, and we see that if it is 6 lakh rupees or around, and the difference is below the materiality level, we say that yes, we have performed one procedures over the rent. So we can take the agreement, we can match this amount with the books, and then we can say that yes, rent has been audited. We do not need to take the invoices for that. Maybe we can take 1 or 2 for samples, but we do not need to check more. Then there comes inspection. I told you, no, we need to take the agreement. When we will be taking the agreement, what we will be doing with that agreement? We will be inspecting it, that whatever are the details, whether the name of the tenant is the company only or not, what is the rent, what is disclosed in the books or not. Okay. Then observation. When I say observation is generally used in inventory counts. See, when we will be going towards the audit of items or a standard which is particularly created for audit of specific items, okay, there you will see that there would be one case where we need to check the conditions of the inventory, and the audit procedure suggested by standards for that is that what we need to do is we need to go to the inventory count done by the management, and we need to observe. What we need to do, we need to go to the inventory count conducted by the management on year end date or the period date or the quarter end date, and we need to observe. That is, we do not need to do anything, we need to observe how they are doing, and if there is any deficiency related to it, can we check? Yes, we can check, and that is called as observation procedure. Okay. Now this R, when I say first R, so there are two R's, do not get confused. This first R stands for recalculation. This generally happens in the case of depreciation. What happens is at the year end you need to recalculate the depreciation or any other amount which is driven by a formula, maybe, right? Now to recalculate it, you need the base details, and then you recalculate it and compare it with the actual. So what we do generally is we reapply the formula of depreciation on an Excel sheet or Power BI, and then we say that whether the depreciation calculated by us based on the information given to us matches with the management's calculation or not. Definitely there could be certain differences based on that they have done the actual calculation, day by day calculation, and we are doing the overall calculation for the year, but that difference should not be material. What is the meaning of material? We will be discussing it in a bit of few minutes. Okay. Now last one is re-performance. When I say re-performance, so this is generally done for internal controls. So there is a process of walkthrough that happens when we try to understand the entity and its environment. We try to understand the processes also. So in the understanding of that process, we have to take one sample also. And when we do that sample, when we take that sample, what we do is we generally walk through it as if it has been said that every PR, purchase requisition, is approved by purchase manager, then what we do, we create a dummy PR and see if it goes to purchase manager for the approval or not. Then it is said that once the purchase manager approves, it gets converted into a PO. So we ask the purchase manager to approve that dummy PR so that to check that whether it is converted into the PO or not, and then that is how we move forward with the process and try to achieve the desired objectives. Okay, so I hope this is clear. Now let's read it once. So I stands for inspection, C stands for confirmation. Don't worry, I stands for inquiry also here. Okay, so don't worry about it. I've just changed the sequence for the purpose of proper understanding. A, analytical procedures. O, observation. R, recalculation, and then R, reperformance. How do you remember it? You can remember it through ICAIORR. Okay. Inspection, example is sample verification. Confirmation, bank confirmation. Analytical procedure, rent rationalization. Inquiry, inquiring about suspense entries. Observation, inventory count. Recalculation of depreciation or tax, and the performance of test of controls. I hope this is clear. Yes, I hope this is clear. Right? Now what we can do is we can go for the next topic, which is assertions. Okay, in this case, when I say assertions, what do you need to understand from this word assertions are the criteria. So for example, if I tell you right now, okay, or let's make it a proper heading. Okay, if I tell you right now, okay, that audit the property, plant and equipment, audit the PP&E. Okay, audit property, plant and equipment. Okay, now tell me one thing. When I say you have to audit property, plant and equipment, you have to audit what? You have to audit property, plant and equipment. Okay, now what all assertions you will apply? Okay, so you might check whether the company has the rights and obligations, that is whether they have ownership of all the assets that they have disclosed or not. You can check whether they have given you the complete asset or not. You will check whether the valuation is done appropriately or not. Okay, you can check that whatever are the assets that are disclosed in the books, whether do they actually exist or not, right? You can check whether they have been booked in the correct accounting period or not. You can check whether the booking process is accurate or not and the overall disclosure is accurate or not, right? You can check whether the P&D as in presentation disclosure, that is wherever it needs to be presented. Say in the case of a balance sheet, it needs to be presented under the non-current assets at the top item, right? So whether it has been presented and disclosed, whether there has been a disclosure of reconciliation given or not, right, as required as per the standards. So what you have done is you have actually mentioned the criteria. That you will use to audit the property, plant and equipment. Correct. So these are exactly the criteria. But why have I written over here this measurement or this occurrence? Because these words have the same meaning, but they are used for income statement. Understood this point? Why I have written it? So for balance sheet we call it as valuation, but for the transaction level, that is for the year transaction, for the transaction of the period, we call it as measurement. Every transaction is measured, every asset or liability is valued. Okay, every transaction occurs, but the balance sheet items gets what? Existence. Okay, so that is what is really important over here. Now let's try to read it once. So completeness, what is the meaning of completeness? All transactions and balances that should be recorded are included. All transactions and balances. Transaction means for the P&L items, income statement items, and when I say the balances, it means for the balance sheet items. Existence and occurrence, whether the particular asset or the transaction actually exists or occurred or not. Then measurement and valuation, so recorded at correct values or not. Then presentation and disclosure, so properly classified and disclosed or not. Then cutoff, recorded in correct accounting period or not. Then accuracy, recorded appropriately or not. Okay, so completeness, existence and occurrence, measurement and valuation, presentation, disclosure, cutoff and accuracy. But my friends, do you need to mug this up? That is, do you need to remember it word by word? By the way, let me tell you that if you have already studied double A, you should already know this. Just in case if you don't, so don't worry about it. We will be discussing it at a lot of times, and then you will definitely remember it. So don't worry about it. Okay. But what you have to do is you have to make a note of it. Okay. Ideally, I would suggest that whenever we discuss about any of the provisions of audit, anything, okay, whenever you attend the classes, especially the live classes, you should always have one blank paper with you or a copy with you. Why do I say that? Because we will be doing a lot of discussions that would require you to write certain things. Okay. So you should always have some writing pad available with you so that you can write it over there and mention it for your recording. Okay. Now, risk. This becomes a little important topic for us. First of all, what is risk? First of all, what is risk? Let's discuss about that first. What is risk? Let's discuss about that first, and then we will move forward. Okay. So when I say risk is an uncertain event. Risk is what? An uncertain event. An uncertain event would happen and would have adverse impact. An uncertain event would happen and would have adverse impact. Okay, an uncertain event would happen and would have adverse impact. That is the meaning of risk. Okay, if I tell you right now, what is the meaning of this uncertain? Uncertain, that is unsure event, right? Would happen and would have adverse impact. What if positive impact is there? Then not covered. Okay, so let me explain it to you. If I say there's a risk that I might earn 1 crore rupees, there's a risk that I might earn 1 crore rupees. Is that a risk? Does it sound like a risk? Definitely not. But what if I say that there's a risk that I might lose 1 crore rupees? Does it sound like a risk? Yes, it sounds like a risk. So that is what is very, very important for us to understand, that it is an uncertain event, but that is supposed to have the adverse impact, that an event would happen and would adversely impact the achievement of objectives of the organization. That is called as the risk. Now, audit risk. Audit risk. Okay, audit risk. So IR, CR, DR. What is the meaning of it? Let's write it. IR here means inherent risk. CR here means control risk. DR here means detection risk. Okay, so IR, CR and DR, inherent risk, control risk and detection risk. Now, what is audit risk? Okay, before I ask you this, I want to ask you something different from a general life point of view. Okay, and if you are available, please answer me on the chat box as well. Tell me one thing. If I tell you right now, if I ask you right now, what is a bigger risk? Okay, number one, you have considered wrong person as the right person in your life. Okay, let go of audit. Let's discuss about life first. Okay, what is a bigger risk? If you have considered the wrong one as the right one, that is a bigger risk. Or when you have considered the right one as the wrong one, what is a bigger risk in your life? From general perspective, what do you say? What do you say? What is a bigger risk? What is a bigger risk? Tell me. What is a bigger risk? Considering wrong one is the right one or right one is the wrong one? What is a bigger risk? What is a bigger risk? What is a bigger risk? Yes, what is a bigger risk? Okay, so the bigger risk is when you have considered the wrong one as the right one, because that will do more damage to you, right? What is the when you have considered the wrong one as the right one? So similarly, in case of audit risk also, that is the audit risk. Now let me spell the definition of audit risk for you. Okay, let me state the definition of audit risk for you. Audit risk is the risk that an auditor will issue inappropriate opinion when the financial statements are materially misstated. For now, you can understand material misstatement as the errors, okay, when they are wrong, when the financial statements are wrong. But we will have a good discussion about what is material misstatement, but as of now you can consider it as wrong. Okay, so auditor will issue inappropriate opinion when the financial statements are materially misstated. What they will do? They will issue inappropriate opinion when they are materially misstated, when they are wrong. That is, when they are wrong, they will issue inappropriate opinion. That is, they will say that it is correct. That is when they will consider the bad one as the right one. That is the audit risk. But what if they consider the good one as the bad one? Is that audit risk? No. Okay. Is that audit risk? No. So Risk that an auditor issues inappropriate opinion when financial statements are materially misstated. What is the meaning of material misstatement? We will discuss about it just in this file only. However, for now you can consider it as wrong. Okay. Now. What is this RMMS? What is this RMMS? What is this RMMS? This RMMS is risk of material misstatement. Risk of material misstatement. What is the meaning of this? This is a product of IR and CR. That is, what are the chances that something might go wrong within an organization. So let us discuss about IR, CR, DR, and then we will get to know about risk of material misstatement also. What is inherent risk? Inherent is made from the word inherit, right? Inherit, that is pre-existing. So risk of material misstatements in financial statement. Please ignore certain errors over here. There are certain, I think, design errors. So risk of material misstatement, but I hope the content is clearly visible. Risk of material misstatements in financial statements before considering any related control. Risk of material misstatements in financial statements before considering any related control. That is, if you do not consider any of the internal control in an organization, then what could be the risk? So risk of material misstatement in financial statements before considering any internal control. For example, in my case, I'm into the teaching industry. In my case, one of the inherent risk of my business is that students would be able to access my lectures without enrolling into the class, without following the due process. They might be able to access my lectures. That is an inherent risk. If I do not consider any control, if I just put my classes through pen drives, I deliver through pen drives, I just copy paste it, and without any encryption and all, that there could be risk. What I do, I try to cover that risk through controls. That is, I try to encrypt my lectures, right? We try to encrypt our lectures, and that is how we try to cover that risk. However, can there be certain people who might decrypt again the lectures and watch it without following the due process? Yes. So risk that a client's internal control, is that a possibility? Does it happen? No. But is that a possibility? Maybe. So risk that a client's internal control will fail to prevent or detect a material misstatement. Risk that a client's internal controls will fail to prevent or detect a material misstatement. That is, even after application of internal control, there might be certain cases where the client's internal control will fail to detect a material misstatement. That is, even after application of internal controls, there might be certain errors. Okay, I hope this is clear. And then finally we come to the detection risk. Now when I say detection risk, what do I mean by it? So risk that the auditor's procedures will not detect a material misstatement. See, what happens is, our audit procedures have certain limitations, right? You might have discussed about inherent limitations, right, in AA syllabus. So when we say that audit procedures are there, is it a surety that we will identify everything that is a fraud or an error? No, right? Because we apply our procedures on a sample basis. There is limited time, limited cost that is involved, right? We perform our audit procedures at a set date. We are not there for the whole year. There are complexity of accounting records also. So that is why there is a risk that the audit procedures will not detect a material misstatement, and that is called as detection risk. Okay. Now, basic audit process. What is the basic audit process? When I say basic audit process, you just need to understand it, just to have a frame of the structure that where we are in all of our syllabus. So first thing is acceptance. Is there any standard regarding acceptance? Yes, there are standards in ISS as well as ISQM which talks about acceptance. Then understanding the business. Are there any standards for this part? Yes, ISO 300 series is about understanding the business. Then risk assessment, ISA 400 series are there. Test of controls, design and effectiveness. Okay, I think the spelling is wrong here. Let me correct it for you right now. So I'll cut this word here and I'll write design in that place. Design and operating effectiveness. Okay. Now, substantive procedures. All of our standards are regarding, most of our standards are regarding this substantive procedures. Test of details, analytical procedure. There's a fixed standard for analytical procedure in ISA 500 series. When we talk about test of details, it would be tested in multiple standards. Okay. Then completion, review and reporting. Are there standards regarding it? Yes, both in ISA 500 series as well as ISA 700 series. And then finally the archival. What is the meaning of archival? We archive the files of the audit files, everything related to audit, say working papers, discussions, consultations, everything, because we need to retain the documents for some number of years. Okay. So acceptance, understanding the business, risk assessment, test of controls, substantive procedures, that is test of details and analytical procedure, then completion, review and reporting, and finally the archival. Any questions so far? Any questions so far? I would love to answer it if there are any questions. I would love to answer it if there are any questions. Any questions so far? Please let me know. Okay. Now, material missing statement. We were waiting for so long to discuss this term, right? Material missing statement. So, what is material? Say, material here does not mean any component, okay, via general English. Material here means significant. So, what is significant? Any item that has the capability of what? Of influencing the economic decisions of users of financial statement. So, first of all, capability should be there. Even if it is not affecting now, it has the capability of affecting, okay. Then affecting what? Affecting the economic decision, that is the financial decisions of whom? Of users of financial statements is said to be material. So anything which has the capability of affecting the economic decisions of users of financial statement, that is called as material. Okay. So in my case, if I say that if there's a company, say company A, that has a turnover of 1000 crores, and that company, if there's a misstatement of say 1 lakh rupees, it would not matter for the shareholders. So is it material? No. But if in a company there's a misstatement of say 10 crores, out of 1000 crores, 10 crores is misstated, will it have impact on my economic decisions? Yes. Okay, because 1000 crore is the turnover, not the profit there. Then what is misstatement? Difference between what is and what should be. Difference between what is and what should be. Now, what is the meaning of it? Difference between what is accounted, classified, presented and reported versus what should be accounted, classified, presented and reported. That is called as misstatement. See what happens is misstatement is just like the statement that you have made, but it is not correct. Okay, so that is misstatement. Okay, so I hope this is clear. Material misstatement. Now, types of audit evidences. Now, this is some knowledge that a lot of students lacks and they face difficulty while answering. So that is why this concept is very, very important, because this is a concept where a lot of students might face difficulty, especially when they read the answers. They always come to me and ask that what is it exactly. Okay. Now, persuasive, conclusive, corroborative and contradictory. Persuasive, it might be true. Persuasive, it might be true. That is, if I have gained access to the bank statement and I have verified, that the balance is say 1 crore rupees in your account, okay, that is bank statement. Okay, so that is persuasive. That is, this document is telling me that the actual balance could be 1 crore. It is not a conclusive evidence that the 100% balance is 1 crore. It is just a persuasive evidence that yes, the balance could be 1 crore. The second one is conclusive. Only this is true. Now, example of this could be bank confirmation. When bank confirms to us that the balance is 1 crore rupees as on year end date, or say 31st March in our case, then we can say that yes, this is a conclusive evidence, because now we have directly obtained a confirmation from an external party to the auditor. There has been a confirmation which is saying that the balance is 1 crore. Then corroborative as in evidence to an existing evidence. For example, in this case, the bank confirmation is what? The bank confirmation is a corroborative evidence, because we already got the evidence in the form of bank statement. Now we have got one additional evidence, that is called as corroborative evidence. Okay. Then contradictory as in when there is a fight, when there is a mismatch between the bank statement and the bank confirmation, then this would be contradictory. That is, two evidences are saying different things, so two evidences contradict over here. Okay, so I hope this is clear. Yes. Now, professional skepticism. I think this is the last concept also. Professional skepticism. Now, what is professional skepticism? Professional skepticism is a mindset. Okay, what mindset? See, skeptical does not mean having doubtful. Okay, being doubtful is not the meaning of skeptical here. Being skeptical means that raising the right questions, being alert, critical evaluation. Okay, so having a questioning mind, that is, if a scenario is presented to you, if an information is presented to you, you should have a questioning mind towards it. And when I say questioning mind, what do I mean by this questioning mind? I mean that you should be able to raise the right questions. Okay, then being alert towards situations that might pose a possible misstatement, that is, if there might be a possible misstatement due to any situation, you should be alert to it. Say management came to you and told you that, you know, we are acquiring one entity in a foreign country. Okay, then you should be alert towards situation that this company does not have enough and sufficient processes for the purpose of conversions. So either it might have a lot of transaction charges, or it might make certain mistake, because this is the first foreign transaction that it is doing. So there might be certain risk. Now, I'm not saying that because of these risks they should not enter into the transaction as per your advice, but there are risks and you should evaluate the related controls over it. Okay, then critical examination of evidences. Whatever evidences have been presented to you, you should be able to critically examine those evidences against the suitable criteria. And this becomes your very, very important definition for whole audit syllabus, because even if it would not directly be asked in case of AAA, you will have to apply it repeatedly. So what all things we have covered in basics? We have covered the definition of audit and assurance, we have covered the terminologies, we have covered international standards on auditing, we have covered the audit procedures, we have covered about assertions, we have covered about risk, we have covered about audit risk. Here we left one point. What is IR into CR? That is risk of material misstatement. And how audit risk is defined? Audit risk is defined as the product of IR, CR, DR. Can there be a question on this? Generally not, but yes, there could be a calculation question on this that we will be covering. Then basic audit process, then material misstatement. What is material, what is misstatement, then types of audit evidences. Then we discussed about the professional skepticism. Okay, so I hope this is clear. So I hope we are done with the basics. Now, can we take a 10 minutes break? Can we take a 10 minutes break? Before starting with chapter 1 of our AAA syllabus, I think what we should do is, yes, I hope this was a learning experience for all of you. Now we will officially start with chapter number 1 of our AAA syllabus. Okay, but before that, let's take a 10 minutes break. Okay. Okay, so now let's start with chapter number 1 of our ACCA AAA syllabus, and this chapter is going to be very, very important, because here we are going to discuss about the international regulatory frameworks. Now, why is the study of international regulatory frameworks important for you? Because once we get into the audit, we will be discussing about a lot of standards. A lot of places would be there when we would be discussing about who has particularly set that standard, what are the expectation out of that standard, and we are going to discuss about a lot of things. So before we do that, we should be aware about that what are the standard setters, what are certain standards that are available, what is the importance of regulatory provisions. And once we are sure about that, then we will be in a position to say that yes, we understand the audit in full. Okay, so now we are officially moving towards chapter number 1 of international regulatory frameworks. Okay, so when I say international regulatory frameworks, what do I exactly mean by it? I'll tell you once. Okay, say for example, in India, if we follow the standards on auditing, then there's a body who issues it, right? There's one committee that issues it. If we follow the accounting standards, there are certain committees that issues it, right? Similarly, when we talk about the international regulatory framework, that is the regulatory frameworks in the context of international environment, there are certain organizations, there are certain committees that issues these standards. Okay, is it mandatory to follow? We will discuss about it, for which organization it is mandatory, for which organization it is not mandatory. Okay, so just to give you a brief of the discussion that we are going to do today, we will be discussing about IFAC, then we will be discussing about scope and development of ISS, then we will be discussing about standard setters, then we will have a discussion about what is public interest, then we will discuss about certain bodies that are there whose regulatory provisions we need to follow. Then we are going to discuss about the impact of corporate governance on audit and assurance practices. Then we will discuss about UK code main principles. Then we are going to discuss about audit committee, and this would be one of the discussion that is going to be very core, and this is very important from the exam point of view also. Okay, and then finally we are going to close this discussion for today of chapter number 1. So that becomes our very important discussion for today, and after this we will move towards chapter number 2, money laundering, and where we will be discussing about some of the key factors of money laundering. Okay, so that becomes really important and challenging for us. Okay, now chapter number 1. When I say chapter number 1, what do you need to understand here? We need to understand the regulatory provisions in the context of international frameworks. Okay, so number one thing is we should be well aware about the objectives of this chapter. Okay, so explain the need for laws. What is the word here? What is the word here? Need. Okay, explain the need for laws, regulations, standards and other guidances related to audit, assurance and other related services. That is what is the need. Okay, then outline and explain the need for the legal and professional framework, including public oversight of audit and assurance practice. There will be discussed about certain bodies. Then the impact of corporate governance principles on audit and assurance practice. Are we going to cover this? Yes. Then discuss the role of the audit committee. What is it exactly? Audit committee. Okay, are we going to discuss in detail about audit committee? Yes. And its impact on audit and assurance practice in relation to the relationship with the external auditor, the oversight and approval of provision of non-audit services. Are we going to cover all of this? Yes, we have just scrolled our syllabus and we are going to cover all of this, so there is not going to be any issue regarding this. Okay, understood. Okay, now International Federation of Accountants. Let's discuss about this first. What is IFAC? Whenever we say IFAC, okay, do not spell it as IFAC, spell it as IFAC. Okay, whenever we say IFAC, it means International Federation of Accountants. This you can understand as the supreme body which has multiple standard setters, which has multiple committees inside it, or which includes multiple committees that sets various standards for the auditing and assurance profession. Okay, not just for auditing and assurance but for the accountancy, professional accountancy profession as a whole. Okay, so what is the mission and vision of this IFAC? Let's first of all discuss about that. Let's discuss about the vision first. So the vision, what it wants to achieve in the long term is that global accountancy profession is recognized as a value leader. Its vision is that global accountancy profession should be recognized as a valued leader in what? In developing strong and sustainable organizations, financial markets and economies. That is, it wants to set its footprints in the form of a global accountancy profession, in the form of a valued leader towards developing sustainable organizations, financial markets and economies. That is, it wants to move towards the sustainability. Okay, now when I say public interest, serve public interest. So serve public interest, the mission is to serve public interest. What is the public interest? We will be having a good discussion about it after few pages. Okay, so serve public interest by contributing to the development, adoption and implementation of high quality international standards and guidances, both in the form of accountancy standards, both in the form of auditing standards, assurance standards, other related services standards, etc. Contributing to the development of strong professional accountancy organizations and accounting firms and high quality practices by professional accountants, promoting the value of professional accountants worldwide and speaking out on public interest issues where the profession's expertise is more relevant. Do you need to remember this word by word? Definitely not. Do you need to have a good idea about it? Yes. Will there be a direct question on this that please write it? No, it will not be possible, right? Okay. So this is going to be little important for all of us. Okay, now scope and development of ISS. When I say scope and development of ISS, so scope is there and development is there. Let's discuss the scope first. Okay, so all standards relevant to the audit process for an organization must be followed. That is, whatever standards we are talking about, if it is applicable to an organization or applicable to an engagement, that must be followed. Is there a choice not to follow it? Must be. That is mandatorily be followed. Is there a choice not to follow it? No, there's no such a choice that is given that you cannot follow it, or there's a choice that you cannot follow it. Even if you have certain deviations, you have to clearly explain the reasons for such deviations in your report as well. So ISS require auditors to use their professional judgment when applying them. That is, you do not need to blindly apply, you need to apply your professional judgment also, that in what case what is applicable. However, you need to apply all the requirements. You cannot take a professional judgment that deviates from the standards. However, in exceptional circumstances, if auditor departs from the requirement of the standard, the departure must be justified in the working papers. That is, the departure, whatever departure is there, whatever departure, say the standard tells you to do one thing, you are doing another thing, then you have to justify that departure in your working papers in a detailed manner. Okay, now, so must be followed, yes. Can we depart? Yes. But once we depart, we have to justify in our audit working papers in a very, very clear manner over here. Okay, now an auditor okay, an auditor can only state compliance with the ISS when all standards relevant to the specific circumstances of the audit have been complied with. Okay, an auditor can only state compliance with the ISS when all standards, all standards relevant to the specific circumstances, that is in a particular auditing environment and a particular accounting and auditing environment, when all these standards have been followed, then only you can say that you have followed ISS. So for example, if there are 30 standards, okay, and you have followed say 29 standards, okay, can you say that you have followed, that you have conducted your audit in accordance with the requirements of international standards on auditing? No, you cannot say that. So an auditor can only state compliance with the ISS when all standards relevant to the specific circumstance of the audit have been complied with. Okay. Now development, how does it get developed? How are these standards supposed to be developed? So project, proposal and input. So project as in what? Project as in what? Project as in the standard. So for example, now if anybody says that there needs to be a separate standard on say digital currency, okay, so standard on auditing on digital currency, that is how do we audit the digital currencies, okay, so that project would be proposed and it would be approved. If approved, project assigned to a task force as in who has the responsibility to research and draft, who has the responsibility to do what? Research and draft. Okay, research carried out and exposure draft is prepared. Research is carried out and exposure draft is prepared. What is this exposure draft? This is the draft that is circulated to the public at large to gain their inputs. Now this draft means what? The exposure draft. Draft means what? The exposure draft. Exposure draft placed on IFAC website and distributed for comments to member bodies, interested parties, and you'll be amazed to know to general public also. Okay. Comments are received. However, will you say that every comment will be incorporated? No. We have to see that what all comments have merits, what all comments have the logic, the rationale, and then we will do it. So, and consider draft revised and reissued, but when? If significant comments are there, if significant changes are there, okay, draft as in what? The exposure draft. Okay, then revised ED as in the exposure draft is approved and issued as a standard. So whatever standard we see today, that must have followed this process, that is the project was proposed, then it was approved, then it was assigned to a task force, then they drafted it, then they circulated it, then they invited the comments, then they considered the comments, then they again revised based on the comments, and then they issued, then they again got approved, and then they got issued as a standard. Okay, so I hope this is clear. This is important. I hope this is clear. Yes. Now standard setters are there. When I say standard setters, these are the committees or the bodies that sets various standards. Any questions so far? Please let me know. Any questions so far? I can read your chats. Please tell me. I have my phone available over here. Please tell me. Yes. Are there any chats? Anything that you would like to speak to me about? Any doubts? Any queries? Yes. Any doubts? Any queries? Okay. So before you say it, I will tell you certain important things over here. Okay. See, I have already told you about how do you need to connect with me on YouTube, Instagram, or Telegram or LinkedIn. Okay, I'll tell you again. On YouTube and Insta, you can connect with me via my username ACCA with CA Supreet Agrawal. Okay. Telegram, I am available by the name of ACCA with CA Supreet Agrawal. Okay. On LinkedIn, I am available by the name CA Supreet Agrawal. Okay. Okay. If you have to buy my courses, then you have to log into our website, which is www.bbvirtualsglobal.com. Okay. So I hope this is clear. Okay. Now, standard setters. When I say standard setters, what do I mean by it? So we are going to study about FATF here. What is FATF? We will discuss. What is IASB? We will discuss. What is IAASB? We will discuss. What is ISBA, IESBA? We will discuss. What is OECD? We will discuss. Okay. To have the consistency and to allow you to have your knowledge testing also, what I have done is I have not mentioned the full name here. What I have done is I have mentioned the full name on the first line of everything. Okay. So that whenever you revise, you can test your knowledge first by writing it there, and then you can move forward. Okay. So number one, what is FATF? FATF is Financial Action Task Force. Financial Action Task Force. This is primarily important in your money laundering chapter. Chapter number 2 that we are going to study today, money laundering. There you will see that this becomes really important for you, FATF, because Financial Action Task Force has the objectives which are very much aligned with money laundering. Okay. Then we will discuss about it in detail. Now, purpose is to develop and promote national and international policies. What is the purpose? To promote national and international policies to combat money laundering and terrorist financing. That is, they want to reduce or they want to eliminate the cases of money laundering or terrorist financing, and that is the core objective of this FATF, which is Financial Action Task Force. They create standards, they create national, international policies for the purpose of avoiding or for the purpose of eliminating money laundering and terrorist financing acts. Okay. Then IASB. IASB stands for International Accounting Standards Board. As the name suggests, what is International Accountancy Standard Board? What does the name suggest? What does the name suggest? International Accounting Standards Board. What does the name suggest? That it might be creating the IFRS, the accounting standards, right? So, committed to developing high quality, understandable and enforceable. High quality as in which will be very much qualitative, which will consider all aspects. Understandable, which could be interpreted by the professionals, and enforceable, which can be enforced at the ground level. Okay. Global accounting standards, generally in the form of IFRS. Okay. When I say high quality, it means covers all aspects. Okay. Understandable by professionals. I'm not saying by general public, but by at least by professionals. Enforceable at the ground level. Okay. Now, cooperates with national accounting standard setters. In our case, for example, in India, you will see that there might be a lot of other standard setters that are working to develop the Indian accounting standards. So, one task of this IASB is to help or is to converge, is to talk to, is to discuss with these national standard setters to achieve convergence in accounting standards around the world. For example, in India, you will see that a lot of our requirements of Ind AS are being taken care by IFRS, right? Now, it is not that we have copied or they have copied or anything. What is the truth? That everybody is working in convergence to make global accounting vision happen possible, right? That is very important. Now, IASB is responsible for developing and approving international financial reporting accounting standards, that is called as IFRS, and this is one important thing that you need to remember. Okay. So, here example could be just like alignment between IFRS and Ind AS is there. IFRS and Ind AS. Ind AS is of India. Okay, understood? Now, IAASB. What is IAASB? This is going to be very important. In fact, I could say most important for our discussion. For our discussion, it is going to be most important. International Auditing and Assurance Standards Board. International Auditing and Assurance Standards Board. International Auditing and Assurance Standards Board, IAASB is there, which is supervised by IFAC and subject to oversight of PIOB. Supervised by IFAC and subject to oversight of PIOB. Now, what is this PIOB? We will discuss in bodies discussion. Okay, PIOB. Okay, so what is this PIOB? We will discuss after a few pages. So, supervised by IFAC and subject to oversight of PIOB. Okay, issues high quality auditing and assurance standards that we have discussed. No, that in our case it is going to be very, very important. So, example here could be ISS. Okay, ISS could be the biggest example over here. The quality management procedures, the quality management standards are also issued by IASB. Now, ISBA. ISBA, what is the meaning of ISBA? ISBA is International Ethics Standards Board for Accountants. Now, my friends, please do not say it as ethical. A lot of students writes ethical over here, which is wrong. International Ethics Standards Board for Accountant. Okay, this is important. International Ethics Standards, and this is also wrong over here. It is not board, it's Board for Accountants, which is ISBA. ISBA develops ethical standards. ISBA develops ethical standards and guidance for use by professional accountants. So, when we will move to further chapters, we will have to discuss about one concept called professional ethics. When we will be discussing about professional ethics, you will see that we will be using the guidance given by ISBA only. Okay. Now, will we solve questions? Yes. In tomorrow's session, we are going to solve questions from chapter number 1 as well as chapter number 2. The questions are going to be from the ACCA study hub, but are we going to use the other publishers questions, the reference materials questions as well? Yes, we are going to cover that also. However, to do that, we have to complete some section of our syllabus, because in those reference materials, the questions are given section wise. Okay, so say from chapter number 1 to chapter number 4, when we complete, then we will be able to solve the questions from that particular reference material. Okay. Now, OECD, this is something new that you might be hearing, right? OECD is something new. OECD is something new. So that becomes really, really important. Okay. So, Organization for Economic Cooperation and Development is called as OECD. Organization for Economic Cooperation and Development. See the objective of it, you will be amazed. Okay. It promotes good governance and corporate activity by doing what? Helping governments by providing surveys and reviews of key economic areas. That is, this organization has the purpose, the mission and the vision to conduct the surveys, to conduct the reviews, and then give it to government for the purpose of economic development. Now, this is something really, really important. No, that at the ground level, there is one organization that is working, that collects the data, that surveys and that collects the reviews, and then gives it to the government for the purpose of decision making. And this becomes really important for us to understand. Now, public interest. What is public interest? So, have we covered all the standard setters? Yes. What are these standard setters? Do you need to remember word by word? No. Do you need to remember the full form? Yes. Do you need to remember the overall objectives? Yes. Do you need to remember these objectives word by word? No. Okay. Standard setters are FATF, IASB, IASB, ISBA and OECD. In what is the next topic? This is public interest. What is the next topic? That is public interest. In general terms, what is the public interest? The public welfare, right? That is the public interest. Generally, we say that whatever is the public welfare, we call it as public interest. However, when you go for the technical definition, and do you need to remember this definition word by word? I would suggest yes, because this is something that forms core of your auditing profession, that forms core of your regulatory provisions. I would suggest that please remember it word by word if possible. That will help you a lot. Okay. So, public interest. What is public interest? The collective well-being of the community. The collective well-being of the community, of people and institutions the professional accountant serves. That is, whatever individuals or organizations we are serving, the collective well-being of each one of them, okay, is known as public interest. That is, if anything suits all of them, if anything impacts all of them in a positive manner, then that would be called as having a public interest. Okay, I hope this is clear. Then that is called as having a public interest. Okay. Now, the accountancy professions public consists of. Generally, I will say the public here consists of the stakeholders. Who are stakeholders? People who are either impacted by the company or are interested in it. Maybe somebody is not interested financially, but they are impacted, say the suppliers. Okay. Now, clients, the accountancy profession has the first public as client. Whenever we say public interest, what is the meaning of public over there? So number one is client. Okay. Number two, governments, because see, these are the two primary people we deal with, the client and the government, the regulatory bodies and the client, right? Then employers and employees, investors and lenders, the business and financial community, and other stakeholders who rely on professional accountants. Do you need to remember these terms? Do you need to remember these people? Definitely not an issue. But via general understanding, can you say that who are the stakeholders for the accountancy profession? The clients, the government, the business people, the other organizations, the stakeholders, right? The investors. So you can remember this, but you do not need to remember word by word. But do you need to remember this word by word? The public interest definition. Do you need to remember this word by word? Yes, you need to remember this word by word. Okay, I hope this is clear. Now let's move forward. The bodies. When we talk about the bodies here, so there's PIOB, there is PIOB, there is PCAOB, there is PIOB, there is PCAOB, there is UKFRC, and these three are there. Okay. So when I say the bodies, number one is PIOB. Did we discuss it over here also? PIOB? Yes, we discussed it under IAASB. Okay, this is going to be very, very important for us. So, what is PIOB? What is PIOB? What is PIOB? Okay, so PIOB stands for Public Interest Oversight Board. Public Interest Oversight Board. Public Interest Oversight Board. See my friends, whenever we are spelling anything, so from now onwards, whenever we discuss about PIOB, we will just call it as PIOB, okay? Instead of calling it as Public Interest Oversight Board, we will just call it as PIOB, okay? So what is PIOB? Public Interest Oversight Board. From the name, what it suggests, that it will be looking after the public interest of the people. So oversees IFX auditing and assurance, ethics and education standard setting activities. That is, it oversees. See, IFAC is the supreme body. Over that also there is one body which is PIOB. Okay. So if you have to develop a chart, PIOB comes at top and it oversees the activities of IFAC. Okay. When I say it is overseeing the activity of IFAC, by natural terms it is overseeing the activity of IASB also, then IAASB also, then ISBA also, and that makes it that is something that makes it the supreme organization. Okay, believes it in the public interest. PIOB believes that it is in the public interest. It is in the public interest to do what? To produce international standards that cover all aspects of the audit process. Because if any aspect is not covered, then the auditors will be forced to take the professional judgment over there, which may or may not be very, very accurate in the condition. Okay. To produce high quality standards, that standard setters act independently and are responsive to emerging needs. When I say independently, that is, they should not be biased. That is, they are creating standards for a particular industry, but they are ignoring other significant industry. They should not be biased. Okay. Then, and are responsive to the emerging needs. Okay. Then what is the second one? The second one is very, very simple. To promote compliance with IFAC standards by member bodies. See, what happens is, one of the members of say IFAC is ICI also, the Indian Institute also. Okay. Now there has been certain standards which are created by IFAC. Now it needs ground level implementation, say in India. So it helps the local organization, the national organizations to do what? To make that standards apply at the ground level in that particular jurisdiction. That standard setters are open. They believe it is in the public interest. That standard setters are open, transparent and responsive to the views and needs of all users. That is, when the exposure draft is created and it is circulated for comments by general public, by stakeholders, by investors, then they make sure, or they say that it is the public interest that we consider the views of everybody. We cannot just consider the views of accountants, we cannot just consider the views of clients, we cannot just consider the views of general public, but what we have to do is we have to consider the views of everybody. Okay, that is important over here. Now PCAOB. What is PCAOB? Okay, so Public Company Accounting Oversight Board, PCAOB. Public Company Accounting Oversight Board, PCAOB. Public Company Accounting Oversight Board, PCAOB. What is the difference between this PIOB, Public Interest Oversight Board, and this Public Company Accounting Oversight Board? So this PCAOB you might have heard in US. Okay, if anybody has the US experience over here, they might have already heard about this term PCAOB. Okay, this is created via SOX Act. Okay, Sarbanes-Oxley Act 2002. So created by Sarbanes-Oxley Act 2002 to oversee the auditors of public companies in the US. Okay, so PCAOB is created in what? In US. To see what? To see the activities of the public companies in the US. Okay, but here students makes a lot of mistakes. Number one mistake. Does it oversee the public companies? Answer is big no. Why? Because it oversees the auditors. It oversees the auditors of such companies. It oversees the auditors of such company and not the public company. That is the first thing that you need to note here, is that it is created by Sarbanes-Oxley Act 2002 and it oversees the auditors, not the public companies. It sees the auditors of the public companies, not the public companies. Now, created to protect investors and public interest by promoting informative, fair and independent auditors report. That is, they issue a lot of standards, a lot of guidances on how to make our auditors report more transparent, more communicative, more towards the need of the users of financial statements. Okay, that is the important point here. Now, it includes registration of audit firms, that is PCOB. In US, every public accounting firm needs to be registered with PCOB before they can sign the financial statements of public companies. So registration of audit firms. Then setting US account auditing standards. What happens is PCOB has the power in US to set the auditing standards. That is, you have to, if you conduct any audit in US or via US laws, what you have to do is you have to follow the auditing standards issued by PCAOB. Inspection of registered audit firms. Sometimes what happens is some audit firms need certain inspection, say in the form of reviews, say in the form of quality management. So all of that would be conducted by PCAOB. But in what jurisdiction? In the US. That you need to understand here and mark it here. Okay. Do not get confused by PIOB and PCAOB. PIOB majorly operates in UK. PCAOB majorly operates in US. Okay. Then enforcement of SOX and the rules, that is whatever provisions are given by SOX Act 2002 and the rules made thereunder, the enforcement of those rules and act at the ground level is taken care of by PCAOB. I hope this is clear. Now UK FRC. Okay, do you have any questions here? Any questions so far? Please let me know if you have any questions here. Please let me know if you have any questions here. Yes. Please let me know if you have any questions here. Yes. Do you have any questions here? Please tell me. Do you have any questions? Yes. Okay. There's no such question. Okay. Understood. Okay, understood. Now, UK FRC. So, Financial Reporting Council. FRC stands for Financial Reporting Council. FRC stands for Financial Reporting Council. So, UK's independent audit regulator responsible for promoting high quality corporate governance and reporting. Financial Reporting Council is there. UK's independent audit regulator responsible for promoting high quality corporate governance and reporting. UK FRC is there. Okay, this is going to be important for us because this is specific towards UK. Okay, so in UK FRC takes care that the report of the auditor should have good reporting, high quality standards it must follow for corporate governance as well as reporting. Okay, so it is the audit regulator. Please note it down. It is the audit regulator. Understood this point? Now the FRC. There are certain objectives of FRC. Do you need to remember this word by word? Definitely not. Do you need to remember the keywords? Yes. Okay. So the FRC promotes the UK Corporate Governance Code and the UK Stewardship Code. What is this word stewardship? You might have discussed it in double A, but what is this word stewardship? What is this word stewardship? Managing someone else's property. So there's a separate code for it. Managing someone else's property. Like what happens in the case of directors, no? In the case of companies, what happens is directors are managing the property, but the property actually belongs to the shareholders. So that concept is called as stewardship, when you are engaged to manage the property belonging to somebody else. Okay, so promotes the UK Corporate Governance Code and UK Stewardship Code. The FRC has the responsibility to promote that because it is the regulator of the auditing profession. No, that is why it is very, very important. Okay, now sets the professional standards for corporate reporting, auditing, and actuarial practice. What is this actuarial practice? So you might have heard of words like gratuity, right? Leave encashment, right? Retirement benefits. So all of that is taken care of by, all of that calculations are taken care of generally by actuaries. In case of insurance also, okay, so you'll see that generally these calculations are done by actuary. So that is the profession of actuary. Okay, so sets the professional standards for corporate reporting, auditing, and actuarial practice. Now represents UK interest in international standard setting. That is, whenever there's a committee meeting that goes around worldwide, then FRC is the organization that represents UK in the international setting bodies. That what is the role of UK, what should be the representation of UK bodies into the international standard setting. Okay, then oversees the regulatory activities of the actuarial and accountancy professional bodies. Oversees the regulatory activities of the actuarial and accountancy professional bodies. That is, it does not perform any regulation, but whatever organizations are there, for example, in case of auditing there is IAASB, right? In case of IFRS standard there is IASB. Okay, there might be some other organization for the actuarial service. So it oversees that whether they are performing their activities appropriately or not. So it just oversees, okay, oversees the regulatory activities. But when I say oversees, it means not perform, just oversee and grant suggestions if required. Okay, now operates independent disciplinary arrangements for public interest cases involving accountants, auditors, and actuaries. That is, can it take independent disciplinary actions? Yes. Can it take disciplinary actions? Can it take disciplinary actions? Yes, it can take disciplinary action, because it is very, very important for us to understand that this organization is not just to oversee. This has certain powers also. This organization FRC has certain powers also. What is that power? Then they can also have disciplinary actions. Against whom? Against accountants. When I say accountants, it means the certified accountants. Okay, certified accountants. Then against auditors who are auditing the companies, and when I say actuaries, so it means the profession of that calculation that we discussed about. Okay, although actuaries are not very much important for us labors, so that is not very important for us to study over here. Okay, I hope this is clear. Any questions so far? Please let me know in the chat box. Any questions so far? Please let me know in the chat box. Any questions so far? Please let me know in the chat box. Yes. Any questions so far? Please let me know in the chat box. I'm waiting for another 1 minute, because I think there might be a lag of 10 to 12 seconds, right? Between when I speak and when you listen, and when you speak I listen. So I'm waiting for another few seconds. Please let me know if there's anything that you need to discuss, any questions regarding notes, regarding discussions, regarding question banks, regarding the discussion that we have done so far, anything. Please let me know. Any questions? Okay, no such questions, no worries. Now, impact of corporate governance. Corporate governance is what? System by which an entity is directed and controlled, right? System by which an entity is directed and controlled. System by which an entity or organization is directed and controlled, system by which an entity is directed and controlled, okay, on audit and assurance practices. Hello, yes, on audit and assurance practices. So the system by which organizations are directed and controlled, that is known as corporate governance. When I say directed and controlled, what do I mean by it? I mean that the systems through which an organization manages its supervision activities, what activities it wants to achieve, what objectives it wants to achieve, what objectives they want to achieve, and what activities they want to perform, that is known as and the monitoring policies, that is known as corporate governance. You might have heard that a company is managed by multiple directors, but all of those directors also have their separate responsibilities as well as a collective responsibility towards the achievement of objectives of an organization. So that is given by corporate governance. Okay, will we have a detailed discussion about it? Yes. Okay, we will have a lot of discussion about it. Okay. Yes, definitely. Please, once you start reading more, of these concepts, once you start using the keywords in your answers, definitely your answers and your overall collective English answers are going to be improved. Okay. Now, why corporate governance is important? Before reading it, can you tell me, why do you think corporate governance is important? Because, see, the owners are the shareholders. Shareholders have given their company for the purpose of management to directors, and directors have the obligation to manage it in the best public interest as well as the best interest of the shareholders as well, right? Now, when I say they have to manage it in the best interest of the shareholders, sometimes it might happen that the directors' view and the shareholders' view are not matching, right? But when we say corporate governance policies are there, and corporate governance policies play a major and important role over here, so directors can say that we have followed the guidances given by corporate governance policies, and what we are doing is in the best interest of the shareholders. So that helps resolve a lot of issues via giving more transparency, giving more accountability, and giving more feeling of stewardship. So how the organization's decision makers act. Why corporate governance is important? Because it sets the tone for how the decision makers of the organizations are supposed to act. Then how they can or should be monitored, that is how the decision makers, that is generally the directors, how they need to be monitored, because they are answerable at each AGM towards every decision that they have taken. How they can be held to account for their decisions and actions via what? Accountability. Via, there is a separate word in your AA syllabus which is known as accountability, which is stewardship, which is agency. So once you understand that, you will realize that directors are held accountable, they are supposed to have a feeling of stewardship, and they are the agents of the company as well as the shareholders. Now, there's one thing in corporate governance which is comply or explain versus rules based. Comply or explain versus rules based. When I say comply or explain, that is either you comply with the provisions that are given, okay, which are set under the corporate governance guidances. Just in case if you are not complying, then you know what you need to do. You need to explain it in detail. So regulatory authorities issues standards. Directors of listed companies, listed companies, not all companies, directors of listed companies are expected to comply and disclose in financial statements. Non-compliance, if there has been a non-compliance, must be clearly disclosed and explained. See, which means if you comply, no explanation is required. However, if you do not comply, then it needs to be explained. Non-compliance, then explanation is required. Non-compliance, explanation is required. I hope this is clear. Okay. So there's a query, sir, I am in class 11, so should I start from FIA route or after 12th? I am confused about choosing the right time. So my friend, what I will suggest you is that there are certain videos available on this channel, okay, which are related to the ACCA guidance. I think you should watch those videos so that you get the complete guidance, okay. This is a detailed question. It will not be right to give you one route directly. we have to evaluate your particular case. So what you should do is you should watch those videos. If you have further questions, there would be a number available on the chat box or the description box, or what you can do is you can directly reach out to us via this channel or my Instagram or YouTube account, which is ACCA with CA Supreet Agrawal, and we will discuss in detail. Okay. Now, rules based approach, because this requires a lot of discussion. I'll not be able to answer it in one go, so we'll have a good discussion about it, not an issue from my end. Okay. Now, rules based, so require disclosure in annual report. Rules based, require disclosure in annual report. So importance of balanced board is given over here. When there is rules based approach, that is you need to follow it, then importance of balanced board is mentioned over there, that what is the requirement of having executive directors, non-executive directors, managing director, and every kind of director and attributes in the board. Okay. Then need for NEDs. When I say NEDs, what do I mean by it? NEDs stands for non-executive directors. NEDs stands for what? Non-executive directors. NEDs stands for what? Non-executive directors. Now when I say non-executive directors, what do I mean by it? Non-executive directors are the directors which do not take part in the active management of the company on a routine basis. Okay. Now, need for robust procedures for appointing directors. See, what happens is in corporate governance, one of the key responsibility person is the director. If the appointment of directors or the nomination of directors or the composition of directors is delayed, then it becomes a big issue in the form of corporate governance, because all of your committees will not be able to work to the best efficient manner. So that is why there are needs for robust procedures in appointing directors. Do you need to mug this up? No. But what you need to understand, that in case of non-compliances under the compliance or explain mechanism, what you should do is, if you follow, you should disclose. If you don't follow, you have to explain also. That is something that you need to remember. Okay. Then merits of AC. What is AC? AC, air conditioner? No. AC here means audit committee. Merits of audit committee. We will be discussing it right after this, when we will be going towards the audit committee's discussion. Okay. Then need to monitor effectiveness of IC. Need to monitor effectiveness of IC. When I say need to monitor effectiveness of IC, what is IC here? What is IC? What is IC? IC means internal controls. Need to manage what? Internal controls. Okay. I hope this is clear. Now, once we are sorted for all of this, okay, what we need to do is we need to understand certain important principles of UK code. When I say UK code, what do I mean by this? So first of all, what we are discussing is the main principles of the UK code. Okay, that is something that we are discussing over here. First of all, we should have that clarity. But before that, I would like to ask all of you, do you have any questions that I could answer here? Any questions? Any questions that I could answer here? Please let me know if there are any questions that I could answer here. Yes, please tell me. Yes, any questions that I could answer? Yes. Okay, I hope there are no questions and everything is clear. That's amazing. So UK code main principles. Okay. So UK corporate governance code. When I say code, what it means? UK corporate governance code is set by the FRC. FRC as in Financial Reporting Council, we have already discussed. It applies only to listed companies. It applies only to listed companies on the London Stock Exchange. But can other companies also apply it? Yes, on a voluntary basis. But can be used by any entity on the basis as the basis for best practice. That is important to understand, that it could be applied by any entity. However, it is mandatory for companies that are listed in London Stock Exchange. Okay. Only to listed companies or what? Only to listed companies of what? Only to listed companies of London Stock Exchange. Okay. Now, it takes comply or explain approach. Compliance or explain approach as in, if you comply, you just need to disclose, but if you do not comply, what you need to do is you need to explain the reasons of non-compliance as well. You cannot just say that we have not complied. You have to explain the reasons also why you have not complied with it. Okay. Now, it has 5 elements, okay, 5 components. Although all of these components needs detailed discussion, but we will not be doing it today. We will be doing it in our upcoming classes, so that it does not get very monotonous for you and the content is very well covered also. But what I have done is I have mentioned these points over here so that we can discuss about it. But all of these points needs a lot of discussion, and when we will do that in our upcoming classes. So board leadership. When I say the components of board leadership and company purpose, that is one of the main criteria, one of the main principles of the code is board leadership and company purpose. That is, company should have that kind of a leadership, or the chairman of the company, the chair of the company should be such that helps the company to achieve its purpose. However, there are multiple points to it that we will be discussing in detail in our upcoming classes. Division of responsibility. There should be a process of how responsibilities would be would be distributed among different people of the board. For example, there could be certain responsibilities which can only be given to, say, audit committee. There could be certain responsibilities which can be given to, say, nomination remuneration committee. There could be certain responsibilities that can be given just to risk management committee. So we will be discussing about all of them in detail here. Okay. Now composition, succession and evaluation. When I say composition, succession and evaluation, what do I mean by it? Composition as in the composition of the committee and the board. That is, there is one particular committee that we will be discussing about later, which is NRC, Nomination Remuneration Committee, that looks after, the board should have that committee, and that looks after the nomination of the relevant people at the relevant places. That is, every committee should have certain directors. For example, in case of audit committee, we will discuss that there should be minimum 3 directors. All of that should be independent as well as non-executive. So that is the responsibility of that committee, that make sure that audit committee has 3 independent non-executive directors. Okay. Succession, as in how the succession of the directors would happen. Say rotation is happening, say one director is leaving, how the succession would happen of the roles and responsibilities and the overall evaluation. Then when I say evaluation, it means measuring the performance of each director, each person of the board against certain criteria to evaluate that who needs what responsibilities in what manner. Okay. Audit, risk and internal control. How the process of audit, risk and internal control. Risk means risk management. How the process of audit, both external and internal, risk management and internal controls mechanism, evaluation and distribution of internal control is managed within an organization. All of these points will have certain detailed requirements, certain detailed discussion that we will be doing in the upcoming classes. Now when I say remuneration, what do I mean? Whether everybody in the board is appropriately remunerated or not as per the given laws and regulations. Given laws and regulations, generally remuneration is decided between the directors and the company, right? No, there are certain laws and regulations also which tells us that what kind of remuneration could be given to a particular director or the board in total. So we have to look over that also. Any questions so far? Then we'll go to the discussion of audit committee, and this is going to be a core discussion, and once we complete it, the chapter will get completed. Yes, any discussion before we start with audit committee? I'll tell you that what you can do is, there is a number that is given on the description of this video. You can directly call on that number and you can have a detailed discussion about it. Okay. Or you can connect with me on Instagram or LinkedIn and we can have a detailed discussion about it, not an issue from my end. Yes. Any other questions, any other discussion points that you would like to do? Any other discussion, any other points that you would like to do here? Yes. Any other discussion points? Yes. Okay. My Instagram ID is ACCA with CS Supreet Agrawal. Okay. You can connect with me over there. Okay. Now let's go to the discussion of audit committee. Now, before we start the official discussion of audit committee, I would like to have a quick discussion about explaining why this audit committee is required and how it is formed. So imagine a situation that this is the board table. The chairman is sitting over here. There are 3 people sitting over here. Then there are 3 people sitting over here. Then there are 3 people sitting over here. Then there are 3 people sitting over here. Now, if we have to reach to a decision, okay, and if we say that we have to take the approval from all of them, then it might take a lot of time. It might result into the process where every decision will take a lot of time. The decision making would be delayed. So what would be a better option is that we give certain responsibilities to these 3 people. We give certain responsibilities to these 3 people. We give certain responsibilities to these 3 people, and then certain responsibilities to these 3 people, right? So one such responsibility is given to these three people, which is in the form of audit committee. Now to have a general explanation, generally these people are NEDs. NEDs as in non-executive directors. These people are also independent. That is, they are not the full-time employees of the company, they are not the consultants of the company, they are not the internal people, officer of the company, they are not the managers of the company. These people are independent of the company. Then how do they get the access to the board? So there is a particular requirement that you have to have composition of certain non-executive directors in your board. Okay. So and audit committee have all three independent non-executive directors. Independent non-executive directors should be there. All three directors should be independent as well as non-executive. What is their responsibility? They look after the financial reporting process. They look out for the appointment of auditors, both internal, external, secretarial, all types of auditors. Okay. They review the work of the auditor. They see if the scope and the responsibilities of the auditors are being fulfilled appropriately or not, whether there is particular help or facilitation which is given to the auditors or not, whether auditors are facing any trouble, what is the final report of the auditor, is it backed by logics, is it backed by standards or not. So everything is overviewed and reviewed by them. Okay. They also recommend that what auditor should be appointed by the board. So ultimate appointment would be done by board and shareholders via approval of shareholders. However they recommend the board that what to recommend to the shareholders. Okay. So that becomes the overall understanding of audit committee. Now let's go for the particular text and start understanding about it. So it is mandatory for a listed company. Important point, yes, it is mandatory for a listed company. Best practice for unlisted and other entities, that is other unlisted and public entities could also have it as a best practice. Through the audit committee, external auditors are responsible and report to the shareholders, not the executive management. That is, we say no that in case of external auditors reports to the shareholders. But who is the party who helps them do that? Audit committee is the party that helps them report directly to the shareholders. Now, the audit committee enhances the external. Audit committee does what? Audit committee enhances the external auditor's independence and provides greater independence for the internal auditor. The audit committee enhances the external auditor's independence via what? Via reviewing their work, via allowing them to be independent in their approach, via making them separate from the internal officers and managers of the company, by reviewing whether they are actually independent or not, or are there any threats that we are going to discuss in ethics chapter. And provides greater independence for the internal auditor. Greater independence for the internal auditor in what sense? Because they review the work of internal auditor also, not just external auditor, they review the work of internal auditors also. Okay. Now composition as in what it is made of. So at least 3 independent non-executive directors, 2 for a small company. That is, if it is a small company, what is the definition of small company? Not covered in our syllabus. But if it is a small company, then minimum 2 directors should be there. If it is a normal company, then there should be at least 3 independent non-executive directors. At least 1 member must have recent and relevant financial experience. When I say recent and relevant financial experience, what do I mean by it? When I say recent and relevant financial experience, what do I mean by it? That is, every member should not be that. At least 1 member should have some financial experience recent. Okay. Then as a whole, the committee must have competence relevant to the sector in which it operates. That is, number 1, can committee have certain non-financial people also? Yes. The committee could have non-financial people also? Yes. But those members should have particular knowledge of the industry. That is, all members should have knowledge of the industry, and at least 1 member should have relevant and recent financial experience. Okay. And of course, it would be in that sector only, since all members are required to have the competence related to the sector in which the company operates. Now, what are the main roles and responsibilities? What are the main roles and responsibilities of this particular company, of this particular audit committee? Okay. Now, monitoring the integrity of FS. I told you that it enhances the transparency and integrity of the FS. What is FS? Financial statements. So, monitoring the integrity of the FS of the company and any related formal announcements. So, whatever formal announcements are there related to the FS. Say, if the company is announcing the annual report, so will audit committee look after it and say that in this particular case this is matching with the financials? Will they review it? Yes. Provide advice where requested by the board. Where requested by the board, that is, they cannot go and sumo to provide their advice. They have to provide their advice when it is requested by the board on whether annual report and accounts taken as a whole is fair, balanced and understandable and provides necessary information. That is, when we are issuing any annual report or any other formal communication, whether it is fair as in appropriate in the given scenarios, and whether it provides the information that is expected of the draft report in a transparent manner or not. Then reviewing the company's risk management and internal control framework. Reviewing, not applying. Okay, reviewing, providing advice, monitoring. That is, they are not doing the work, they are either monitoring, they are either recommending or providing advice, or they are reviewing. Okay, unless separate, so they review the risk management and internal controls also, unless separate RM committee or board addresses it. What is RM? RM stands for risk management committee. This is also required in listed companies. Other companies might not have it. So if there is a risk management committee, then they will look after those processes of risk management and internal controls. If not, then this committee, audit committee, will look after it, or board. Sometimes board also takes charge of that internal control and internal control and risk management. Okay, now monitoring and reviewing the effectiveness of the company's internal audit function. Okay, monitoring and reviewing the effectiveness of the company's internal audit function. When I say monitoring and reviewing what effectiveness of internal audit, so please remember that this point is talking about what? Internal control. This point is talking about what? Internal control, whereas this point is talking about what? Internal audit. Please do not get confused. Please do not get confused. A lot of students gets confused over it. Okay, and then reporting to the board on how it has discharged its responsibility. It means what? It means what here? It means what here? The audit committee. Okay, it means what? The audit committee. How audit committee has discharged its responsibilities? They have to give representation in front of the board. They have to report to the board that how it has discharged its responsibility. I hope this is clear. I hope this is clear. Any questions so far? Any questions so far? Please tell me. Any questions so far? Please tell me. Yes, please tell me if there are any questions so far. Yes, please tell me if there are any questions so far. Any questions so far? Please tell me. Oh, this is good to go. Now, my friends, before moving further, I would like to tell you that you have to read everything once from ACCA Study Hub. Read everything once from ACCA Study Hub, because there might be a lot of other points that you might find little difficult to interpret. Although I have covered everything over here, but just in case, if you read anything and you need to figure out something, please feel free to tell me. Okay, as a best practice, I would suggest that you go and read it once. Okay, although these notes have everything, but for example, when we come to key points from FRC guidance on audit committees, there are a lot of points that we have already studied about the audit committee. Those are repeated over here. So what I have done is I have mentioned the new points over here, not the whole point but the new points over here. Similarly, in case of key points from audit committees and the external audit minimum standard, here also there were a lot of repeated points from the above two guidances. So what I have done is I have mentioned the new points over here, but once you go over this, you will realize that all the points we have understood, but what needs to be mentioned over there other than these specific pointers, you will get a good understanding about it once you read it. Okay, so that way you should always read it once. Now key points from FRC guidance on audit committees. So the company should provide an induction program for new audit committee members. Can they provide for existing audit committee members also? Yes, if there is a requirement. The committee should at least annually, that is once every year at least, okay, meet the external and internal auditors without management. They should meet the external and internal auditors without management, and they should evaluate their viewpoints, their evaluations, their work. Okay, the audit committee should be provided with sufficient resources to undertake its duties. For example, if they need access to certain people, certain documents, they should be able to do that. The committee is responsible for overseeing the company's relation with the external auditor via what? Via continuous discussions. That is, whether the external auditors discharging their responsibilities as per the appropriate measures or not, what are the reports of the external auditors, whether they are considering the relevant statutes or not, everything would be reviewed by the audit committee. The board has ultimate responsibility for an organization's risk management and internal control system. But the board may delegate to the audit committee some functions to assist the board in meeting this responsibility. That is ultimate responsibility with board. However, audit committee might be delegated, not delegate, might be delegated. That is, board may delegate certain responsibilities to audit committee so that the overall objectives, the overall functioning related to the risk management and internal controls could be achieved. So although internal control and risk management, we have discussed, no, that audit committee sometimes reviews the internal control and risk management policies also, unless there is a separate risk management committee or the board takes over it. So the board has the ultimate responsibility towards it. But can board give that responsibility or delegate some part of that responsibility to audit committee? Yes, but ultimate responsibility would be ultimately of the board only. Now, the audit committee should have primary responsibility for the appointment of the auditor. When I say appointment, primary responsibility, so it would be for recommendation. Okay, audit committee does not appoint the auditor. Audit committee only recommends the appointment of the auditor. What if board wants to go with some other auditor? Can they do so? Yes, but they have to disclose in their reports that why they have not selected the auditors given or recommended by the audit committee and they are going with another auditor. Okay, so that is the power of audit committee. Okay, now the audit committee should approve the terms of the engagement and remuneration to be paid to the external auditor. What should approve? Do you need to remember these points word by word? No. But what you should do is, you should be able to apply whenever there is a case study. So if there is a case study which says that audit committee, that the remuneration is fixed by the board without discussing with the audit committee, will you say yes, it is appropriate? No. You will have to say that the remuneration and the terms and conditions that needs to be done by the auditors, the external auditors or the internal auditors, needs to be approved by the audit committee first. So in that case, board has not done the right thing. Okay. Now the committee should assess the independence and objectivity of the external auditor annually. The committee should assess the independence and objectivity of the external auditor annually. The committee should assess the independence, whether the internal and external auditors are independent or not. Does internal auditor needs to be independent? Not necessarily. They can be independent, yes, but external auditor needs to be independent. Okay, here I'll put up a question: why not internal? Why not internal auditors? Also, because they can be, or let us write it this way, because they need not be independent. Can they be independent? Yes. Do they need to be independent? No. Okay. At the start of each annual audit cycle, the audit committee should ensure that appropriate plans are in place for the audit. Audit committee should ensure what? That appropriate planning has been done by the auditors over here. Okay, so I hope this is clear. Now, key points from audit committees in the external audit, that is the minimum standard. This is the minimum standard given in the UK. So please try to understand it. The standard is applicable to the largest UK listed companies, that is included in FTSE 350 index. Whatever companies are included in FTSE 350 index, exactly applicable on those companies. Okay, other companies may wish to apply its provision, that is, there is no restriction that others cannot apply it. Others can also apply it as a best practice. Okay, now what is given by this guidance? The mandatory standard, the minimum standard. Managing non-audit relationships with audit firms. Why do they need to do so? See, what happens is, audit is a process where there is rotation. So continuously you might require tendering. What is tendering? You might apply invitations, or you might invite invitations from multiple audit firms for the purpose of rotation or for the purpose of changing in the next year. So to have that relationship with other auditors, it is recommended over here that you should manage non-audit relationship. That is, whatever work is there which is not related to audit, you should get other firms involved into it, so that tomorrow if there is a requirement of changing the auditors, you already have relationship with certain firms. They already have certain understanding of your entity, so the risk might be reduced. Now, conducting the tender process and making recommendations to the board. Conducting the tender process as in what? Inviting offers. Tender process as in what? Inviting offers. Tender process as in what? Inviting offers. Okay, from firms. And making recommendations to the board. Only recommendations, not hiring, the recommendations. Okay, not hiring, only recommendations. Then review and monitor the content of the external auditor's management letter. What is management letter? This is given under ISA 500 series. Okay, ISA 500 series, we will discuss about what are the contents of the written management letter, written representation letter. But management letter is something where management discusses. I am just telling you in brief. Management discloses and signs that we have given all information to the auditors. Whatever information was available to us, we have given that. We have given all the evidences to the auditors. There's nothing in our knowledge that we have not conveyed to the auditors which might be relevant for the financial reporting. So all of that is written and signed. So they review and they monitor that those content is appropriate or not, whether we have covered all the contents required for the purpose of audit or not. So this becomes a little important. Now benefits and limitations, these are a little extra points, but please try to understand it from the point of view that if you are required to write it, it would be only from the point of view of that do you know the generalized benefit of having audit committee or not. Okay, so one benefit is it provides effective and informed oversight in helping to ensure market, public and stakeholder confidence in high quality financial reporting. That is, it enhances the stakeholder confidence. Can we write it? Yes. Do we need to write in exact words? No. Enable the board to delegate a thorough and detailed review of audit matters. Enable the board to delegate a thorough and detailed review of audit matters to what? To the audit committee. So it leaves the board with more time for the overall management, because one part of the management, which is audit and assurance, is taken care of by the audit committee. Then enable NEDs as in non-executive directors, to contribute independent judgment on issues of critical importance in running the business. Generally, non-executive directors might not get their say into the board. However, by delegating this responsibility to audit committee, which is formed out of non-executive directors only, you are giving significant representation to non-executive directors in your board, which will enhance the transparency and accountability in the minds of others as well. Offer or the overall board. Offer the external and internal auditors a direct formal link with non-executive directors, because a lot of times the executive directors might know certain things that they might not be able to tell to the auditors. But if auditors have direct access to non-executive directors, they will be more transparent, they will be more confident that they are talking to an independent party, and their decisions, their conclusions or their mechanisms will be taken in the independent and unbiased manner. Now limitations. See, whenever we talk about limitations, the cost may be there, right? So may be considered as an unnecessary legal or regulatory burden placed upon the board. That is, it is very difficult to find those people who are independent, who wants to be part of the audit committee, and who are non-executive also, correct? So that makes it difficult and a little burden on the board. Plus it is mandatory to have in listed companies, so you cannot even say that we are not finding it, so we are letting it go. No, you have to find it. So the required time and expertise of non-executive directors makes finding suitable candidates harder. We have already discussed it. Members may feel that the responsibilities and risk are too high than the reward. See, they are not dependent, they are not getting any direct remuneration or profit sharing from the company, yet their risks are so high that they have to review the public reports, they have to review the public announcements, they might not be aware about certain cases, and they have to review that they have reviewed they have to review the public announcement, they have to review the financial reports, they have to review the work of the auditors. So sometimes they might not also be aware about the full facts of the organization, right? So that makes their work very, very risky. However, there are no such rewards to it. Now issues with the balance of cost benefit. Sometimes it might involve a lot of cost not just in the form of finance, but a lot of process also, and benefit might not be so much, and only effective when they can operate as the governance courts intend. That is, this is very important point, that is, audit committee would only be effective when they have been given the relevant authorities, powers, responsibilities, obligation as intended by these courts or the regulatory guidances that are there. If they are not being given the relevant power or authority or obligation, then it might not be able to achieve the desired objectives. Do you need to remember these limitations and benefits word by word? Definitely not. With this, we have completed chapter number 1 of your AAA syllabus. So congratulations to all of you. Here we will just be discussing about one portion of it later on, which would be these 5 components, so that you get the detailed understanding of it. Today we have already discussed chapter number 1 in so much detail that if we discuss these points in detail, it will become a little monotonous session for us. So for today, what we will be doing is we will be taking a 10 minutes break again, and then we will be going for chapter number 2, that is money laundering. And what we are going to do, are we going to complete it? No. What we are going to do, we are going to develop a lot of basis of that chapter in such a manner that when we discuss money laundering again, we will be in a position to discuss it in detail, and we will be having all the basics cleared. Okay. So let's take a 10 minutes break. It's 12. Let's come back by 12:10 and then we will be starting with chapter number 2 of your AAA syllabus, which is money laundering. Okay, so thank you so much. Okay. So now we are back with chapter number 2, that is money laundering. Okay. So please confirm on the chat box. Please confirm on the chat box if I'm audible and visible clearly. Yes. Okay. So I hope I'm audible and visible clearly. Now my friends, we are going towards one of the most interesting topics of your ACCA AAA syllabus, which is chapter number 2, money laundering. Okay. Whenever I talk about money laundering, generally people consider that money laundering is just the conversion of illegitimate money, or the common word that they use is conversion of black money into the white money. What is your say about it? What do you think? What do you say about it? Tell me. What do you say about it? Generally people think that black money, that conversion of black money into the white money, is called as money laundering. Is that so? What do you think so? Tell me, what do you think so? Tell me, what do you think so? Let me know on the chat box, what do you think so? Yes, what do you think so? Okay, so I'm sure that a lot of people will answer that conversion of black money to white money is money laundering. However, money laundering has a very big scope as far as that is concerned. Okay, it's not just conversion of black money to white money, but there are multiple other aspects to the money laundering. Okay, so once we complete this chapter, you will realize that money laundering is such a big concept and we only knew about 1 or 2 parts of it. Okay, so what we are going to do is we are going to learn about money laundering here. Are we going to complete it fully today? No, we are going to learn some of the basic concepts, some of the core concepts of money laundering, and then in the next classes we will be completing it also. Now definition, what happens is definitions are really important. When I say money laundering, the definition becomes really important. That is, we need to do what? We need to understand certain definitions. So what is the definition of money laundering? Concealment of. Now what is the meaning of concealment here? What is the meaning of concealment? Concealment as in hiding. Concealment of true origin as in what? Source. Okay, original source. Okay, and ownership as in property, legal ownership of criminal proceedings, any proceedings obtained, any money originated out of illegal activities. Okay, that is the interpretation that we should know when we are discussing about money laundering. And creating a legitimate cover as in legal cover, creating a legal cover. So it's not just conversion, it's hiding the true origin also, it's hiding the ownership also. Okay, creating legitimate cover for the sources of income. Okay, it specifically includes possession as in custody, that is, even if it is not yours, it is in your possession, it is in your custody. For example, my office has that amount. Dealing, that is trading or transactions. Procuring, that is securing as in securing. When I say securing, it means from any kind you are calling it to yourself, securing. Okay, so what is the definition of money laundering? Concealment of true origin and ownership of criminal proceedings, and creating a legitimate cover for the sources of income. It includes specifically possession, dealing and procuring of that particular money. I hope this is clear. Yes, please let me know in the chat box if this is clear. Please let me know on the chat box if this is clear. Yes. Okay. Now, principal offenses. Generally, people think that only the conversion is the offense. Offense as in the criminal activity for which there are penal actions. But that is not true. That is not true. A lot of times there are multiple other things that gives rise to the principal offenses related to the money laundering. In fact, there are other offenses also. We are just talking about one of it. Okay. So it is laundering. When I say laundering, laundering as in converting, laundering as in converting, laundering as in converting into clean money, converting into legitimate or clean money, legitimate or clean money. Okay. Then failure to report suspicion, just in case, and it is not failure to report the incidence of money laundering, failure to report suspicion. What is suspicion we will discuss, but just in case, if you suspect, that is you do not have any proof or anything, but just you suspect that some person has done the money laundering or has been involved in any activity related to money laundering, and you have failed to report it to the relevant authorities, then also you will be considered as conducting a principal offense, not just any offense, principal offense under the money laundering provisions. This is very, very important for us to understand. Money laundering has such a big base, right? Then tipping off. Now this becomes really important. Tipping off as in, if Mr. A is there, okay, Mr. A is there, Mr. B is there, okay, Mr. B is subjected to an investigation, okay, subjected to an investigation by department, subjected to an investigation by relevant department. Okay. Now Mr. A got to know about it, and Mr. B told Mr. A told Mr. B that there is an investigation against you that is going to be launched. You should hide your resources as of now only. Okay. This is called as tipping off. When you are making somebody against whom the investigation is going to happen, you are making them aware about the investigation. That is called as tipping off in simple terms. Okay. That is, in Hindi we call it as pusu, right? So that is tipping off. Okay. Laundering, failure to report suspicion, and tipping off. Okay. Now stages of laundering. When I say stages of laundering, what do I mean by it? Stages of laundering, what do I mean by it? So there are 3 stages of laundering. That is, whenever there is a laundering, it is done into 3 stages. Okay. We'll have to discuss about each of these stages in detail, but for today we will not discuss each one of them in very, very detail. We will understand it, but we'll read the technical text in the upcoming lectures. Okay. Now, what are these 3 stages? So the first stage is placement. Second stage is layering, and third stage is integration. When I say placement as in when the money first enters the financial system, Layering, when it is converted into multiple sources, so as to make it difficult to identify the original source. Okay. And third one is integration, when it comes back to the economy in the form of legitimate, in the form of legal money. Okay. Let me explain this with the help of an example. You know, there was a movie once. In that movie, what happened was, Mr. A got certain money. Okay. This was purely black money. This was purely legitimate money. Okay. Mr. A did was, Mr. A obtained that money. Mr. A took that money to some other country. Okay. Foreign country. Okay. Mr. A did what? He distributed this money in that foreign country to multiple people, say B, C, D, and multiple others. Okay. Then he asked that deposit all of this money into A Limited in India, okay, in the form of, say, IPO. So A Limited has issued the IPO, and that money came back in the form of legitimate money. Now the only concern here was to take this money to foreign country. Once it reaches the foreign country, then what has happened? They have converted into multiple layers, say from B, C, D, then from again to other people, and then they called all of that money back in the amount of small portions, and then they called it as legitimate money, that is in the form of investment. So similar thing has happened here. Placement as in when that person first received the money, that is first introduction into the financial system. When the money is first introduced into the financial system, it is called as placement. When the money is first introduced into the financial system, it is called as placement. When it is converted into multiple layers, okay, so as to hide the origin source, so that is known as layering, which is concealing the origin via series of complex financial transactions. So Mr. A has given it to Mr. B, Mr. B has given it to Mr. C has given it to Mr. D, and so on. They have made it possible. Okay. Now integration. So reintroduction into the financial system in the form of clean money. Reintroduction, integration as in reintroduction. When those people have reinvested that money into the company, which is A Limited in this case, then that would be called as integration, because now nobody can question it. Now it has been introduced in the form of a clean money. Okay. So placement, layering, integration. Placement, layering, integration. These are the three stages of money laundering. I hope this is clear. Yes. Now move forward. Failure to report suspicion, failure to report suspicion, failure to report suspicion, failure to report suspicion. When I say failure to report suspicion, we discussed, no, it is one of the principal offenses, failure to report suspicion. So, legally obligated to report suspicion to financial intelligence unit. Whenever you suspect that there has been a transaction, there has been a person who is involved into the money laundering, what we need to do? We need to ultimately report it to the financial intelligence unit, which is called as FIU. We have to report it to that particular institution. If we do not report, then we will also be considered as conducting a principal offense under the money laundering offenses. Okay. Now, suspicion report should include suspicion report. When you are reporting those suspicion reports, should not just be like that you suspect and they launch the investigation. No, your suspicion report should include certain things. One of those things is reporting business full name. That is, what is the full name of the business? Identification of suspicious party, that under that business also who is conducting the suspicious transaction. Suspicious transaction details, that is, when you suspect that certain transaction has happened, what are the details of it, from which country it is originated, from which person it is originated, in which currency it is happening, and what are the other details of the transaction, maybe the transaction IDs and all if you have available. Then suspicious property details, if it is not for a transaction but a property, say movable property or any other movable property also, then you have to show the details. That is, it is very simple. You need to report the business, you need to report the person, you need to report the transaction or the property details. I hope this is clear. Yes. Now, tipping off. When I say tipping off, what do I mean? When I say tipping off, what do I mean? When I say tipping off, what do I mean by it? So, tipping off means disclosing about an ongoing or potential investigation. Disclosing about an ongoing or potential investigation. That is, if there is going to be an ongoing investigation, or if there is going to be an investigation in future, and you are letting anybody else know about it, especially the party on whose company there is going to be an investigation, then you will be said to have committed the offense of tipping off. Tipping off is very, very important for all of us to understand, because this is something that we generally end up doing, right? So that is why this is very, very important. Okay, so what are three offenses? Laundering, failure to report suspicion, and tipping off. Did you discuss about laundering? Yes. Did we discuss about laundering? Yes. There are three stages: placement, integration, and layering. Placement, layering, integration. Placement, layering, integration. Failure to report suspicion, did we discuss? Yes. Did we discuss about tipping off? Yes. Now let's move forward. Risk associated with money laundering. We will be completing in a matter of 5 to 10 minutes. Okay. Risk associated with money laundering. See, what happens is, once you are into the stage where you have done the money laundering, once you are into the stage where you have committed an offense of money laundering, now what is supposed to happen? I'll tell you. You might get fines and penalties. You might get fines and penalties. When I say fines and penalties, what do I mean by it? You might get fines and penalties. When I say fines and penalties, what do I mean by it? That is, there might be certain parameters that might be fixed, that if you have done a money laundering transaction of say over 1 crore, what might be the penalty, what might be the fines. You might go to court. Court might give you certain damages, right? Now, loss of reputation. Once you are caught up into the transaction of money laundering, definitely you will lose certain reputation, that this you do not need to deal with this person, because this person usually has the reputation that this person enters into the money laundering transaction. People, for example, if tomorrow I am convicted of money laundering offenses, do you think people will try to take my classes? Maybe not, because they might be fearing that if I pay to this person is involved into money laundering, and our money would also be caught up there, and we might also be traced back as a money launderer in the eyes of law. So there would be loss of reputation. And finally, imprisonment. If it is proved that you have done that transaction, then there could be imprisonment also, and generally there would be imprisonment also. Money laundering is such a bad offense. Okay, so risk associated with money laundering, fines and penalties are there, loss of reputation are there, and imprisonment is there. Why this is considered as one of the biggest risks to caught up in money laundering? Because generally multiple nations are involved, and wherever there are multiple nations, you will be bound by the legal formalities of both the nations, and it might create a lot of trouble for you. Okay, now what are the general defenses? General defenses means what generally people say about this money laundering offenses, as in what do they generally say, that we are not money launderer because of this reason. So they say, intention to report existed, but there was a reasonable excuse not to report. That is, they wanted to report. For example, they are being caught up in the suspicion, and that is, they did not report the suspicious transaction. So they might come up with a defense and say that we wanted to report, sir, please believe us, we wanted to report. However, the only concern is that we were unable to report for some reason. Maybe we called but the person didn't pick up. Maybe we visited the office but it was closed. Maybe we wanted to communicate but we were unable to because of some fear, some intimidation, right? So this could be first defense. Second defense could be responsible party acted in good faith. That is, the person said that I believe that this person has been entering into a transaction in good manners only, in good faith only. That is, there's no reason to believe that this person would do the money laundering in such a case. I did not have any reason to believe that. Is why I did not believe that it is a money laundering, and since I did not believe it was a money laundering, I did not report it. And report has already been submitted to MLRO. Generally, they might also come and say that, you know, we have already submitted a report to MLRO. Now, what is MLRO? So let's discuss about MLRO. What is MLRO? MLRO is Money Laundering Reporting Officer. Money Laundering Reporting Officer. That is, they might come up with a defense by saying that we have already submitted the details to MLRO. MLRO is the officer who is given the responsibility of managing the money laundering. Okay. Managing the money laundering as in reporting part. When any report comes, how do you need to deal with it? Responsible for overseeing the organization's anti-money laundering and counter-terrorism financing compliance efforts. So responsible for overseeing, okay, the organization's anti-money laundering and counter-terrorism financing compliance efforts. That is, whether organization is taking active efforts or not, and if they are taking, how well they are functioning, how effective they are. Okay, now how to prevent money laundering. This is important discussion. How to prevent money laundering. So establish AML culture. AML as in anti-money laundering. Establish anti-money laundering culture. Okay. Appointment of MLRO. MLRO is given below. Officer who assumes the responsibility of overseeing all the transactions or all the activities of an organization related to anti-money laundering and reducing or eliminating the terrorist financing. Designate key person for risk management. That is, the person who is given the responsibility of managing the risk within an organization should be a key person. The person who has power and responsibility in his hands. Otherwise, the risk manager would be able to say that, or would be end up saying that we do not need to enter this transaction, but the top level might still do it. So the responsibility of risk management should be given to a person who is a key person for the organization, who has certain key responsibilities for the organization as well. Okay, implement systems for verification and record keeping, which is CDD. We have discussed it just below this. Okay, what is CDD? See, in case of banks, you might have seen that there is a system of customer due diligence. There is a system of KYC, know your customer, right? What they do, they take your national IDs, they take your addresses, they take your phone numbers, they verify everything before giving you any account opening details or anything, right? Why do they do so? Because every company or every bank needs to have these details to do the proper KYC analysis, so that they can know that from which origin the money is coming, from which origin the money is going. Implement system for verification and record keeping. This is generally important for banks, but it is important for other organizations also. And staff education and training. There should be appropriate education and training given to the staff to identify the transactions of money laundering, so that if anybody tries to include them into the money laundering transaction, they should be able to identify that this might end up in money laundering, and they need to report it as well. They should be aware about their responsibilities as well. So what are certain parameters through which you can prevent money laundering? Establish AML culture, appointment of MLRO, designate key person. Key person is very, very important over here. That is, even if you have a risk manager, but that person is not a key person to the organization, who will listen to him, right? Implement systems for CDD and staff education and training. Education and training is very, very important. Now, when CDD should be done? When CDD should be done? So when establishing a business relationship, then CDD should be done. When establishing a business relationship, and when suspecting money laundering. When establishing a business relationship, that is first time. When CDD should be done? When establishing a business relationship, that is first time. And then whenever suspicion is there. You can also do it on regular intervals, say every year, every 5 years, every 3 years, you can do in that manner also. Okay, so I hope this is clear. Okay, now what are certain examples of suspicious transaction. What are certain examples of suspicious transaction? What are certain examples of suspicious transactions? So unusually large cash deposit. If there's a bank that has, and in fact, I have personally evidenced it also. If you make a large cash deposit, okay, say in my case, maybe if I say I have deposited 1 crore rupees in my bank account, then bank might flag that transaction and ask me specifically by calling. My relationship manager would call me up and ask me that what is the source of this transaction, what is the source of this money, and if required by laws, he or she might end up reporting to the regulatory authorities also that in this person's account there is a deposit of 1 crore rupees, which is unusually high for him. Unusually large cash deposits. Then high value transactions with unknown parties. High value transaction with unknown parties. High value transaction with unknown parties. See, if you have made a business transaction, say in my case, I have collected a fees of say 10,000 rupees from a student. That is not unusually high amount. That is not from an unrelated party. However, if I am unable to justify it, say any person has deposited an amount of say 10 crore rupees in my bank account, and I do not have any business relationship with him, I have not taken any loan from him, then this transaction should be considered as a suspicious transaction. Transactions inconsistent with normal business patterns. For example, in my case, receiving the fees, refunding the fees, giving the amounts to employees, and printing cost, and all of these transactions are normal. What if I tell you tomorrow that I have paid one faculty say 50 crore rupees in the year without any benefit to the organization? Then it might be said that I have entered into a fraudulent transaction with him, I have entered into a money laundering transaction with him. With this, we have completed the basic details of this chapter, and now we will move to the next lectures where we will be discussing everything about this chapter, and we will be solving certain questions as well. So in the next class, our agenda is going to be to complete chapter 1 remaining portion, okay, chapter 2 remaining portion, and solve questions, where the primary agenda is going to be solve questions also, because it is very important for us. This will not take much of the time. This might be completed in say 1 hour, but later we have to do what? We have to solve the questions. Now my friends, just to repeat for you certain core details. If you want to connect with me, okay, if you want to connect with me on YouTube or Instagram, how you can do that? You can do that via my username, which is ACCA with CA Supreet Agrawal. Okay, if you want to connect with me on LinkedIn, you can search me by the name CA Supreet Agrawal. If you have to get connected to my Telegram channel, you have to search ACCA with CA Supreet Agrawal. Okay, and if you want to buy my courses, what you need to do? You need to go to our website by the name of www.bbvirtualsglobal.com. Okay, that is how we need to do it. Okay, just in case if you face any trouble, please feel free to contact me on any given channels, and I hope all of your doubts have been resolved. Just in case if you have any doubt which is not resolved, please feel free to let me know. Okay, so thank you so much. I really enjoyed this session with you, and we have covered a lot of content today. We have covered chapter 1, we have covered basics, we have covered chapter 2 also. So thank you so much for being such a patient audience, and I would love to tell you that we are going to have a lot of fun in all of our next sessions. And will these notes be provided to you? Yes. Will these notes be provided to you? Yes. Will these board notes be provided to you? Yes. Will question banks be provided to you? Yes. Will board notes of question banks be provided to you? Yes. All of these would be, yes, all of this would be the soft copies. Okay, will it be provided to you? Yes. Okay, so now what we can say is got it for audit. See you in the next class. Thank you.